S&P update. Really, my conviction is the same. I said that we topped here in July, and this is all a corrective move up. And just to let everyone know, I forecast these waves, or these price targets with by counting Elliott wave, but I don't really count traditionally, and I don't label them traditionally. You can see these numbers or these letters here, they're different colors, and for me the colors are just a lot easier for me to differentiate between the higher degree to the lower degree trend, and this platform doesn't really allow me to quickly scribe the notate the labeling. So I just found it's a lot easier to color code them. So I'll just explain which is a lower degree or higher degree as we go along. And one other thing is that I've been really trying to count every move in 3 waves. It's kind of difficult to explain why, but I came across some correction moves in Elliott waves, and one that caught my eye was an expanding flat. And I've just noticed that every time we come to a top, it really seems like instead of like a truncated fifth or just a really minute fifth wave, it really fits in my counting as an expanded flat, and then the correction continues from there. So right now I'm trying to count every chart in 3 moves. So it usually run across more of a complex correction count, whether it be a WXY count. So I've tried to label them ABC just to simplify everything, but the WXY really is going to fit into a lot more of my 3 wave counts. So now that I've got that out of the way, and I've said this a couple of times before, but I really haven't got into why I count 3 moves, but it also has to do with the fibs, and that's how I trade, and that's how I get the price targets with the Elliott wave, is through these Fibonacci retracement derivative percentages. I don't really use the extension derivatives because I feel like when I count 3 moves, the second wave I don't really need to add into the to the next wave, and I really hate to use my retracement tool as an extension tool, but that's what, or I don't want to call it the retracement tool. It's, for me, I use it as an extension tool, if that makes any sense. So anyways, I hope that makes sense, but let's get into the E-mini chart here. I got a lot of videos I'm going to try to put out today, because I'm expecting some big moves. I mean, if you check my old videos, like I said, I think this was the high in July, and we're just doing some kind of expanded flat higher. So an expanded flat means that I can make new highs based off this leg right here. So all I have to do is measure, oops, sorry about that. All I have to do is measure this July 16th high to the August 5th low, give or take a couple of days there. I'm not zoomed in, but so anyways, that gives me this 161 target. So it's complicated because really it's hard to explain. But oops. Okay, so my move here from the July high is 3 moves, right? So I'm counting one down, and then this move here is a triangle pattern, A, B, C, D, E. Okay, and now from here, I'm anticipating the third leg down, somewhere down here. Now the confusion is this part right here, and that's what I like about the fibs and counting 3 ways, because even though I measured this leg to get the end of B, it actually gave me the target that I needed from the turn down from here on November 11, 2024, this year. So right now it's another expanded flat, and until the market starts figuring out that we're catching on, they're going to probably end up changing this. And once you understand counting 3 moves, you're going to understand WXY patterns, how to count complex corrections, and you'll figure out once you get the corrections labeled, it's going to be a lot easier to forecast moves. But anyways, so since November, we got another expanded flat. So we measure the leg that it's given us so far. And I'm measuring here because I've already done the internals on this move up, and it's another expanded flat. So there we go. Gives us the 123 right here, and you can see we're using it as some support. So if it breaks it, then it's going to go a little higher the next fib. So these fibs are still in play, and we could see some moves higher. But like I said, I'm anticipating a move down, and with Fibonacci or with Elliott wave counts, they incorporate the Fibonacci extension tool and retracement tool, and also the time series for specific dates for downturns or upturns in a chart. So if I take from the July high here, grab our time series, and our high is somewhere here. It might actually be right here. For argument's sake, I'm just gonna click on right there and bring this up. So is what this is each one of these represents a specific move, significant turn up or down derived from Fibonacci sequence numbers. So it starts with 1, 2, 3, 5, 8, 13, 21, 35, or 34, 55, 89. I think the 144 is up here somewhere, which I think, yeah, so we're pretty close to this next time series, but you can see there's a little bit of I guess a little bit of a miss between some of them, but it's not too far off. It hit pretty good. So the bigger, and I said this in another video, the further out in the Fibonacci sequence you get, the bigger the correction. So in here there's smaller corrections, and then as we get out to here it's going to be bigger corrections. So this lines up with what I'm anticipating as a what I have labeled as a minor degree C down, I think, which is somewhere down here in this shaded box. Somewhere down here. And, you know, basically I get the C move just measured by the initial A move. So instead of measuring up for the B, I just measure down for the C. Oops. So again, I'm using for this Thinkorswim platform, I'm using the Fibonacci retracement tool as the extension tool. And I know this is not a traditional way to measure or count, but I'm trying to prove a point that, you know, with Fibonacci, it's, you know, it doesn't really matter, you know, too much how you count it. It's gonna play out. They're gonna line up pretty much the same. So anyways, this is a 123.6% retracement, or extension, I should say, based on this leg A. So that would be one of my first targets as we start to turn down. So, like I said, I got a few videos I want to put out today, so nothing's really changed. Like I said, this is what I've been anticipating, and I think the other videos, all I was trying to do is figure out how to count this middle part, the subdivision into the wave B up here, this wave B. So I'm just going to go ahead and stick with the A, B, C, D, E pattern. But I already said in a couple ways that I counted this as a zigzag with a triangle here and the impulse for a C up. So it still gives me the same price target. So so basically, like I said, as it's coming down, this range right here is going to be some price action movements, so we can play the bounces off the price action there. The red being more of a significant bounce, and then the white, from the way I have it, is kind of a lighter support and resistance, and the yellow would be a little bit more significant price action. So yeah, that is about it. So basically, the reason I'm putting out the videos because I'm expecting the turn. Okay, so based off the time series, just to recap here. So there's our time series, and I have two overlapping fibs, one here and one here. Okay, the 123 and the 161.8. These two right here, pretty close. So I will leave it at that, and hopefully we get something on Monday that will lead us in a direction one way or another. I hope that helps, and thanks for watching.